ProfessionalInvestor.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, TRIers. I suppose also some of the public. I don't know how many people in the public watch this, but yeah, we got our hardcore group here, regulars. Of course, when I was a teenager, I caught the stock trading bug, and I haven't lost it since. So only a goof like me would be here 24/7, 7 days a week. But what the hell? Hey, take advantage of it. Make sure to have your trading journals out. You never know. I might say something that after 35 years ago, geez, I guess his experience was right on that regard. I might want to write that down. Look for that in the future. That's the whole point of all this, right? Of course, I'm going to give you a lot of my opinion, but I mean, that's all it is nobody really has a crystal ball. But what the hell? If you can get some value out of my rants and sort of the ideas that I try to convey and teach people, then this is a win-win all around. Even in the dog days of summer, coming into the end of August. In fact, locally here on the West Coast, we have the Pacific National Exhibition that starts shortly, and almost like clockwork, you can set your watch that it should start raining. So ironically enough, we're getting close to that. I'm sure all the kids are not going to be happy with the rain returning to BC, but anyway, that'll make the grass green again. As I sort of said there a moment ago, total dog days of summer kind of market state. Here we are, 22nd of August, coming into the end of the summer. As I said, probably only nut jobs like myself and well, maybe not. Just anyway, are paying as close attention through this market as we are. Fundamentally, pretty light news day again. Tuesday's Econs had existing home sales here come out about 2 hours ago. A little bit less than expectations. I don't really think that this should be a big surprise. I don't think the floor falls out of the U.S. housing market. I've told you all repeatedly ad nauseum who I think is vulnerable in this world and where the market's really going to break hard. And of course, I happen to be living in one of those countries. So anyway, with regard to the U.S. data, I would think very similar to sort of like the middle to the end of the 1940s. None of us were around for that, but probably you remember the middle of the 1980s. I would say that the economy and the society over the next few years is going to be very similar. In fact, I lived in Los Angeles through the 1984 Olympics, and I think 2024 and 1984 are going to be really similar. Anyway, point of the matter here, end of the summer, data itself fairly thin. They haven't seen huge movements in the market. Overnight trading notes coming out of the gate this morning, the general sentiment in the market, European shares rise helped by tech rally. We've had, I think, pretty sizable dead cat bounces. And then NVIDIA going a little bit crazy there yesterday. And we had that big key reversal, so I guess that shouldn't have been unexpected. As always, I always like to just take a boo at what the heck Japan did overnight to give us sort of a gauge of what maybe we should be expecting through the day. You can see it's pretty green right across the board. So unless we had some absolute train wreck data, I don't think we were going to have like an overly down day. I mean, I don't think I consider this a train wreck. But I would just simply say, rate of change, obviously the Fed wants the market to somehow try and cool down a little bit. And the overall data print, Are we going to actually M out here with today's data, which would catch a lot of people's attention? And oh my goodness, no, this might actually turn into a W and the damn housing market goes crazy again. So I don't think we got anything compelling out of the news today. So yeah, it's the end of the summer. Heading into the U.S. Federal Reserve Board likes to actually, let's see, they probably even give you a nice description of Jackson's Hole. That's just Brian being kind of grade 12 or grade 6y. I remember old site members would be like, Brian, you're such an it. Never did get out of junior high. Anyway. Yeah, and this Jackson Hole Symposium. They sit and talk about how wonderful all their banking theories are and what great leaders of our society this banking cartel is creating. Blah 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 blah. When I used to work in the corporate world, every major corporation, every major association always has these, summer retreats and all that kind of stuff. So that's really all this is. And it's a great, like a lot of people will say that, networking and all that kind of stuff and, team building events. In fact, our speaker du jour Tuesdays, he's from the Eurozone. They love that kind of stuff. So this is just it's just business as usual, par for the course. Everybody in the market is going to be going, okay, are they going to say something? Are they going to say something? Are they going to say something? And 9 times out of 10, they don't make any reference to short-term interest rates or where the Fed's going to go next or when and all that. But at the same time, too, everybody in the market will be paying attention to it. It is kind of interesting that we have this BRICS event coming up here. I kind of comically laugh at all of that. I mean, hell, one of the major components of this BRICS idea can't even enter the country on fear of being arrested. So I mean, I don't know. I suppose mafiosos also operate kind of under those kind of guises as well. But to be perfectly honest with you, unless you're actually working within those countries themselves, I found it interesting that I heard, I think it was like a Malaysian speaker the other day was saying, well, it's kind of weird how we have to, if we want to buy something from like, say, I think it was within Africa or something like 2 African countries, that they have to use the US dollar as an intermediary for every transaction. Well, the reason why is because you can't trust the local currencies, and they, local leaders get in power, kind of like what you're seeing in my country, substitute drama teachers, and they just print money like it's going out of style because, hey, they're the leader now. They can do any old damn thing they want. And of course, creates hyperinflation. We all know Zimbabwe is a local story, but over my career, I've seen at least a half a dozen of these countries do this, so it's nothing new. So, you can believe in the BRICS kind of idea if you want, but I just don't think it holds a hell of a lot of water. And I mean, are you really going to give Laddie your hard-earned money, your pension money and stuff, and actually trust him not to go spend it on the latest, blah blah blah. Okay, so slow news day. We've got a couple sort of big kind of like geopolitical, I suppose, kind of events. The Wall Street is going to be keeping an eye, of course, on what the banksters are saying over there in Wyoming. But to all intents and purposes, it's the end of the summer. In fact, probably people who really wanted to get sort of a tone of what to expect out of Jackson Hole probably would have been a good idea to listen to what these guys have been saying here this morning. In fact, actually, not this morning. They'll be talking in about, I guess, about 2 hours or so. So if you can get access to their speeches, I guess there was already another one here this morning. And again, like I said, the middle of the summer, I didn't see any huge econ driving news events. So it's kind of just a sideways environment. Keep in mind that the breadth indicator has been sort of moving one direction for quite a while now. And usually this thing only stretches out so far. What I've found is, from my observations, this moves on about like a 2 or 3 month oscillation. So you'll go like 2 or 3 months to the upside, 2 or 3 months to the downside. You can see that we have actually been working our way lower really since, I guess, the beginning of July. So this is now getting, we're now a month and a half, if not more, into this move, which means, like guys like Larry Williams and stuff like that were basically calling that the, NASDAQ and stuff should pivot somewhere mid-August and start heading back up. Don't be surprised if we actually get a substantial rally coming out of whatever this sort of Jackson Hole symposium is. If I understand correctly, the Fed isn't meeting for at least well into September. And also, too, there's this funny Russian election happening on September 9th. I'm sure a lot of people in the world are going to be sort of casting an eye on that. So I wouldn't be surprised if actually there's a counter trend move. Also, too, I noticed that the US dollar index itself is actually getting pretty extended here. So, funny, on the day trading club, we sort of were like, if you ever see 7 or 8 divergences, get ready. The market's going to head the other direction. So we're at 1 confirmed and 4 potential right now. But, we've come quite a long way, and we are actually up against horizontal support and resistance zone. I mean, it is interesting to see how the US dollar just steamrolled its way up through these highs. I'm personally going to just be watching for all these divergences. And if we start getting up into like 4, 5, 6 confirmed divergences, I'm definitely going to be thinking that there needs to be some sort of correction here. It's not here now. It's not here yet. And I suppose it would make sense ahead of that BRICS event. There's probably going to be a little bit of, well, actually, no. Maybe we got to buy the rumor, and then on the other side of the BRICS event, you got to sell the news. I don't know. But my hunch is that well, actually, no. I'm just going to leave that now. I don't have any hunches there. I'm just watching, but I do. It feels as though we've come too far here. When it's due for a correction. Anyway, that would be if the U.S. dollar did top out. That would be sort of a risk on bet, and as you can see right now, the markets are not thinking risk on here at all right now. So interesting to see how the crude oil market's trying to turn there. All right, so what do I want to show? That's not what I want to show. I want to show. Is it here? Yeah. Oh, I just got signed out. Oh, wonderful. You know what? Maybe that's Karma saying we won't do that today. Maybe just finish this because it's such a late news day. I'm not really. I mean, you all know the regular routine. I'll just go off of the live charts. All right, now actually look at this. This is interesting. We were watching to see if some sort of bottom would come in here, but we did notice, geez, got another fantastic lesson in we were sort of watching if there was going to be a bottom that develops here through the euro close. And we got a breakout through this trend line, but notice we never did break bearish market structure here. So I was a little bit concerned with the way this started to develop. And then we got 1 high, 2 highs, 3 highs. We got M tops. And then the euro close comes in. We got this big failure here. We were, before the daily brief started, we were watching how we were going to act against this trend line. And this right here is actually, I mean, it's awfully lower time frame, really small time frame. But you could argue, here is up, down, up, fail, M structure, go with the trade, down we go. So nasty price structure. And why? And I think the answer is these guys. Actually be interesting to see what he's doing here. These bank stocks down in the States, not happy at all. We were wondering whether this guy was going to hold the lows. You can see how he's come into resistance, moving average resistance, and now put in a bit of a double top and starting to break down here. So these bank stocks are not looking happy at all here today. And you can see that it's weighing on the market. And that, I got to give a hand out or a shout out to Lovable Longbow. He was the one who was noticing that this morning. If we look at the financials, this is where the damage is being done here today. Let's see, did that load up here? And then we'll go charts, and they're not going to show us the lower time frames. No. Anyway, you can't really see anything off here. But what I wanted to point out was if we actually look at something like a JP Morgan on the daily chart, this actually was such a beautiful top. Really, really good lesson for everybody here. Again, you watch the channel and you're kind of like, well, teach me something here, Brian. So it's worth me paying attention. Had the most prettiest, first and foremost, big old W bottom. So when you get your W's, you can draw your fog and bombs to the upside. And I think you can make the argument there's a pretty important pivot right in this area here. And I've seen this happen repeatedly. So, make note of this. All you regular watchers, you're getting a nice little treat here through the summer. Notice how the market went up, and it actually went beyond the 2.618. But then it started to falter. And of course, look at all these divergences. Remember what I said there a few minutes ago about if you start to see 4, 5, 6 divergences start coming up on this indicator, you better pay attention. This is an absolutely perfect example of that. So we got all our divergences. And of course, if you're really lucky and we get scripts and stuff like that, that makes your life easy. Or maybe, coming to TRI and we'll teach you actually how to identify and actually confirm what divergences there are. And I always think, like, if you fancy yourself a market technician and a trader, you're really a student of the market, which means that you should be able to, if somebody just off the street said, can you please explain to me what a bearish divergence is and how it actually works? You'd be surprised how many people can't answer that question that fancy themselves traders, right? So it's a little dangerous getting sucked into these sort of scripts that you make it really easy for you. So, half of the reason why I did the course was to actually teach you how all this stuff actually works and what are the textbook definitions. But anyway, that's all right. Back to the story. So I think that you had a trade location. And as I had said there a second ago, great learning material here, because what I often see happen is, if we just draw a horizontal line off of that sort of confluence at 2.618, look how that double top, that M top actually formed almost exactly right off that level. So I think you have trade location here. You have indicator confirmation. Like I said, you got 6 bloody bear divs. You better pay attention. And now finally, and this is the coup de grace, is of course, we have a big fat M in price. That is the sort of, and I think Grimm actually articulated it best a few years ago, but this is the 3-step setup: trade location, indicator confirmation, price structure, go, right? So that means you go short right here, and this is your party. Woohoo! So we're all the way down here now. Interesting if you did that fog and bomb constant kind of conversation. Notice 2.618 off of this top is right here, right up against this original high. So maybe it's an idea to book some profits here had you taken that M top here. And, is it 2 to 1s and all that kind of fun stuff? I'll leave that up to you. But what a great lesson there. And actually, again, thanks to Lovable Longbow, he was the one who mentioned this. And of course, as soon as I saw the chart, I go into, teacher mode, and I'm like, hey, look at this. Hey, look at that. 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 So it's interesting to see how the market's puking out here. I actually think you can see 200 SMAs. I'm wondering whether this 2.618 has been lost. And actually, the next objective here, notice these big gaps, how often the gaps like to get filled in. And if you need to be taught that kind of stuff, we have a new school term starting here shortly. So anyway, wondering why the market's weak. Well, I think it's these bank stocks. And if I'm not mistaken, I think a bunch of them were actually downgraded today. And you can see they're all generally not very happy. And that's weighing on the market. So all right, so 9:20. I suppose we got a few more minutes. We can circle around, talk a little Bitcoin. Bitcoin's sort of caught between, am I a financial asset? Am I a fear proxy like a lump of gold? Am I a new monetary system? I suppose maybe that's financial asset. Am I a tech stock? Because of course, I'm all technology oriented. So in a weird sort of way, I think Bitcoin's kind of caught in tug of war right now. And if anything, it's great that you have a diverse buyer base, because then that means when one camp gives up, and when one camp gives up, usually that's like a crash in prices. There'll be other camps that will come in and say, your garbage is my gold, that kind of thing. So my interpretation of the Bitcoin price chart right now is actually, I think it's going through a very natural process, very normal, very healthy. I don't see anything really out of the ordinary here. Um, this is, of course, I think, to all intents and purposes, I think Bitcoin has been securitized, which means that it's going to be subject to things like seasonality, very much so. Buy when it snows, sell when it goes, buy when it snows. So if anything, you actually seeing price come down, and we do have a few people that are on the site that have this attitude. And as an investor, actually, that's the smart attitude to have. When stuff goes on sale and nobody else wants to buy, that's when you actually need to be able to step up and buy. So, the fact that we're coming into another buy when it snows window, and of course, you've heard me talk at length about Benner cycles in 2023, and Bitcoin likes to bottom about 6 months ahead of happening events and all that kind of fun talk. This actually makes perfect sense. I mean, I'm not quite sure what the right-hand side of this head and shoulders pattern, if this is a fractal, what it's exactly going to look like. My hunch is it's going to look something along these lines. But, history, if anything, what I've done here with these dotted lines, which is kind of helpful, is to try and understand the universe as a fractal kind of concept, and how this really is nothing more than just a big maple leaf. And so that's the left-hand side of the maple leaf, right? And I suppose, me being a good Canuck, I'm allowed to use this image, right? Think of this image and then look back at the Bitcoin chart. It's actually pretty similar. Hopefully you can see that sort of maple leaf kind of image up there, because that's what I think is going on here. And if this is a head and shoulders top kind of idea, then this, and think market symmetry and those kind of conversations, then this should be the other side, right? So the green side is over here and the orange side is over here. So yeah, I mean, the past week, in fact, one reason why I think that the selling is probably going to hit some sort of climax here, the major media was coming out with comments that Bitcoin was crashing. So as soon as you hear the major media outlets use that kind of terminology, they want to freak the public out. They're given orders to freak the public out. But of course, they're the public freaking out and panic selling. They're actually selling into buy orders. And of course, candle body highs and lows for trade location. We go down to the lower time frame chart, 78.6. This was Peter Fink's, sort of V bottom low that was going to need to be tested. And here we are. The only problem here right now is I don't really see any signs of a bottom here whatsoever. We have a bear A, B, C, D. We've gone beyond the 100%. So this is the sort of alt A, B, C, D. We've gone beyond 1.272. So that means naturally we should go to this 1.618. And you can see prices coming off here in the short term. I wouldn't be surprised if that has to happen. As well, too, remember we talked about if you get a whole bunch of divergent signals, it probably means something's setting up. So when you saw all these divs up top here, of course, trade location, we're back up against top ends of ranges, all that kind of talk. We don't see any divs here at all, and that's a little bothersome. I think we are starting to see them off the lower time frames a bit. I go down to this chart maybe. Well, anyway, yeah, we're coming up on 20, 25 minutes. So why don't we just leave it at this? For me to really understand that there is a bottom here, I need to see our bull div indicator start getting excited. So we might have trade location. And this is also another great learning piece for you. Notice how MACD, and this is now off the 4-hour chart. Notice how MACD just had sort of like this V bottom. Whenever I see MACD look like that, I can't believe this is a real bottom, because what usually has to happen, I don't know whether I can show you this, but usually what has to happen is it has to go down, then up, then test the low. This might go to like a new low. Maybe that's what's happening now. So down, up, down. This goes to a new low in price. So we have a lower low, but this does not break that low, and we actually have a higher low, which isn't drawn very well, but you get the idea. And that will start spitting up divergence signals, and we just don't have that. So as a result, and you can see now new M's are coming in here. I guess is the stock market still feeling pretty sanguine right now? They're selling stocks off. You can see lower highs and lower lows on the day. So there really is no real push to be a buyer here in this market. And a lot, and keep in mind, we got all that China crap going on. I suppose I'll finish off with just tooting my own horn because, geez, I love the sound of ringing the register. And this is what I do. If anything, I only bought like 3 or 4 things through the whole summer in the stock market. And this is actually a really good testament of exactly how I approach the market. So I was very lucky today. One of the names that I was interested in had a fairly sizable rally here today on basically one of their drugs was kind of halted and by the Food and Drug Administration down in the States. And it was sort of like, oh boy, are they, is the drug in trouble or something like that? And I'll just put all this stuff away so you can see. Just keep it simple. That's what caused this absolute meltdown in price. Boom. As you can see, actually, we had one confirmed div right here. I started to get a whole bunch of bullish indications. And if I'm not mistaken, I really like this sort of weekly turn. Nice little pivot low in here. I really like this little inverted head and shoulders. Now, like recently I took a long shot off of like this FCEL on a very similar type pattern. I went in here and bought off of this low, and I was willing to risk to a break of this level here. The market broke and I walked away, and I guess that was a good idea selling there at 175. It's 143 now. So I'm willing to take these shots because, and this is basically the same logic. This one actually had a little bit better defined bottom entry. Now I just sold half on a double here. And I put like $500 into these things each. This is generally a number I like to throw at these things for fun. Now, basically, I got a free position. I got my original $500 back. And if I add up this guy, the little plug power loss, and then I also had to take a loss on the little internet stock that I bought 2 or 3 months ago, actually, I'm up right now. And that's basically what I do. I had to bail on this one because it lost these lows. So anyway, point here is this is a trader's life. And interestingly enough, I was actually a bit surprised because I have the sell half on a double idea going here, and I could sell the whole thing if I wanted to, but I don't see any reason to get in front of this. I mean, you see look left. You heard me barking about look left recently. Got a key pivot high here. I mean, maybe we stop here, and that's where I sold half on a double, so that worked out pretty well. But this is all open air, especially if you go down on the daily charts, all up here. Really, this gap should be filled in, so I'm not really in a hurry to touch this thing. And we'll see where the hell the wind blows us. Now we're in absolute strongest position possible. Technically a risk-free trade. So anyway, we'll see where the wind blows us. Okay, so that's my trading day. Didn't really do anything in futures land. Really not seeing any setups that are my sort of style. We were watching for something maybe developing through the euro close, but instead of bullish setups, we actually got bearish setups coming out of here. So I was like, you know what, just leave this thing alone. I'm not interested. Okay, we're gonna head off. Actually, look at that, right about a half an hour. I think that's how long I'm supposed to talk. So probably a good place to end the conversation. We're gonna head on over and chat a little with TRI's CTO, Stuart. Stuart, you ready to rock this thing?
Yes, we are.
All right, so let's go have some fun with him, and have yourselves a great rest of your day. PMA for the win, and we'll have our stock pickers club meeting tonight. And just FYI, there. Let's see if I can say this in one run-on long sentence. Just absolutely beautiful narrow sideways channel fail signal here, and a spread trade idea. 7 confirmed bear divs. I suppose it makes sense why it broke down. So that's be a fun one to talk about here tonight, and then also too be interesting to see whether bids are getting filled here on the key spread trade we were considering, buying the call and writing the higher up call there. I like that trade idea. So we have lots to talk about in the club meeting here tonight. So have yourselves a great day. PMA for the win. All the best. And the only left for everybody to say is bye for now.